Hi, I'm Don Havre with a real estate firm in the Tri-Cities in the state of Washington. I work with my daughter Michelle, and the two of us form the Havre team within the Tri-Cities, which is in the southeast portion of the state of Washington. Today's subject deals with home buying, specifically within the Tri-City market. And people frequently ask themselves, is this the appropriate time to purchase a home within the Tri-Cities? And I think before you can answer that question, you really have to go through an evaluation process. And part of that evaluation, I believe, should include these four factors. One is, how long do you plan to live within the Tri-Cities? My personal recommendation is if you plan to live within the Tri-Cities for less than 3 years, possibly renting might be a better option for you. Why? Because there is a cost to procure and sell real estate. However, if you have relocation benefits, you certainly could purchase in a much shorter window. The second question is you have to ask yourself, do you have sufficient down payment and income? For an FHA presently, it's about 3.5% down plus closing cost. We certainly anticipate, and not too many months in the future, that the down payment requirements are going to increase substantially as a result of change in federal regulators and how they're looking at the banking industry. The third question, of course, deals with adequate credit. You can get a credit check and determine whether or not that your credit is in good standing, if you have some questions about that. And then finally, peace of mind. Some people are just not well suited for home ownership. They're concerned about maintenance and other responsibilities. Now, Fannie Mae in November of last year actually conducted a survey and asked people why they were purchasing a home. And they found that 80% of the respondents indicated that they were purchasing a home to have a good place to raise children and provide a good education. 79% said it was important to them to have a physical structure where you and your family feel safe. Well, 75% indicated it allows you to have more space for your family. And then 69% says it really gives you more control over what you do with your living space. And I have found that the majority of people that we've worked with over the years actually find these reasons to be very valid as well. Now you ask yourself, how about return on investment? How did real estate do as far as when you compare it against the stock market? Well, my father-in-law told me years ago that probably you shouldn't look at your personal home as an investment. But if you were to do so, if you take a look at the period of January 1st, 2000 through February 1st of 2011, real estate from a national perspective has actually increased 43.9%, while you can see that the NASDAQ dropped, the S&P dropped, and the Dow went up 10.1%. So when you take a look at these other investment opportunities, real estate has done reasonably well since 2000 to 2011. How about Tri-Cities? Well, I did go back and take a look at average sales prices starting with January 1st, 2000 and carried it forward to February 1st, 2011. And I found a real constant increase in price. Actually, over this period of time, the Tri-Cities average sales price has increased 58%. You know, Forbes magazine has looked at the housing situation, and it said housing really has had a superb decade with 58% average gain per square foot when they looked at it from that point of view. I think it's very important when you're asking the question about is it appropriate to purchase, you have to take a look at the supply and demand within the immediate area. In this particular case, we're talking about the Tri-Cities. In order to look at the supply and demand, we have to ask ourselves, are we dealing in a buyer's market? Is it a neutral market? Or is it a seller's market situation? And one of the ways that we determine that is to take a look at our inventory. For instance, if we have 1 to 4 months of inventory available, we would generally say that that's a seller's market situation. With 5 up to 6, we'd say it's even, and in 7 or more, we'd say it's definitely in a buyer situation. And if you take a look at those various categories, you can see that pricing would be appreciating under a seller's market and depreciating under a buyer's market. I personally think that once we cross over the 6 months threshold of inventory, that we're clearly leaning towards a buyer's market situation. Now, where do we stand within the Tri-Cities? And I just worked up this data yesterday, March 1st, 2011. We had 979 listings the previous month with sales of 157. So if we divide 979 by 157 sales, we have 6.23 months of inventory. That's a little bit higher than what we've been experiencing over the last couple of years. But you can see it leans slightly towards a buyer's market situation. How about if we take a look at national home prices and where everything seems to be going? According to Macro Market Home Price Expectation Survey, it looks like we're going to have nationally a drop in prices this year, and then as we get into 2012, we're going to start to see prices increase once again. I know many economists agree with this type of an assessment. When an individual looks at purchasing a home, frequently they're focused on price, in other words, the price of the home. But really, if you look at it, when you're on the buying side, you really have to be concerned about cost. When you're on the selling side, you have to be concerned about price. And so it is technically possible where it's a good time for people to sell and it's a good time for people to buy at the same time. Why? Because they're looking at two different factors, cost versus price. If we take a look at what's happened with mortgages since April 1st of 2010, you can see we had a general decline, and then most recently interest rates have started to climb. And at the time of this recording, we were about 4.75, 4.8, and it went over 5 and dropped down immediately. But we certainly anticipate that interest rates over the next year are definitely going to be on the climb with inflation and other factors that are pushing interest rates higher. If we take a look at 30-year fixed rate mortgages, according to MBA, NAR, and PMI projections, you can see that National Association of Realtors is anticipating when we hit the fourth quarter of this year that we're going to be at 5.4%. So that's definitely, most major economists are looking at the price of money is definitely going to get more expensive. Buyers need to consider the cost of ownership. A slight increase in mortgage interest rates can have a greater impact upon the monthly payment than the house prices dropping over a period of time. I'm going to say this once again because this is a very, very important concept. A slight increase in mortgage interest rates can have a greater impact upon the monthly payment than the house price dropping over a period of time. Now, if we take a look at the Wall Street Journal, a few months ago, it indicated that if prices come down another 10%, but interest rates increase by 1% percentage point, that would mean the same monthly payment in today's market. So let's take a look and see if we can explain this a little bit. I certainly realize this chart is a little bit busy, but if you look over on the far right-hand side, right in this area right here, what we have is a $400,000 loan. And let's just say for simplicity purposes that the price of this home is $400,000 and it's a 100% loan. Now, what happens if, in fact, the price of real estate were to drop 10% and interest rates were to go up to 5.5%? We'd have a payment of $2,044. And if you take a look over here at our original, if we had an interest rate of 4.5% with a $400,000 loan, we'd have a payment of $2,026. So essentially, what this chart is showing us is that we can have a slight increase in interest rates and a substantial drop in prices of homes and still be at essentially the same payment. This is a critical point for people who are in the home purchase cycle as far as them to consider. Wall Street Journal says, with home sales starting to improve and with prices now possibly forming a bottom, real estate could well be the asset class that represents the best low-risk buying opportunity today. Karl Case of the Case-Shiller Index said a dream house after all for people with realistic version of the American dream. Buying a home now can make a lot of sense. And I've talked about the Case-Shiller Index over previous months, and I think these folks are really on top of what's going on in the marketplace. Donald Trump, he says, I'm pretty sure this is a great time to go out and buy a house. And if you do, in 10 years, you're going to look back and say, you know, I'm glad I listened to Donald Trump. And that was a quote from January of 2011. John Paulson, famous investor, entrepreneur, says, if you don't own a home, buy one. If you own one, buy another. If you own two homes, buy a third, and lend your relatives the money to buy a home. Well, I'm not quite that aggressive as far as purchasing homes, but I think that you kind of get the idea that many of these top investors think that the price of real estate is definitely going to be appreciating in the out years. 67% of those polled by Gallup indicated overall this is a good time for most Americans to think this is a great time to buy a house. Interest rates remain near historic lows. Home prices are down sharply, providing many with incredible buys. So, with the cost of home ownership increasing, by that we mean interest rates climbing, this appears to be an excellent time to buy, specifically within the Tri-Cities. Why? Because it looks like interest rates will be going up. We certainly don't have any immediate indications that prices will be softening. More likely, they'll continue to climb slightly, which means the price of home ownership, or the cost of home ownership, is likely to just get more expensive each and every month that someone waits to get into the marketplace. Well, once again, I'm Don Havre with the real estate firm in the Tri-Cities in the state of Washington. If you have questions about whether or not this might be a good time for you to look at purchasing a home, give us a call at 509-783-8400 or send us an email to don@key2homes.com. Well, we wish you the best, and thanks for watching.